Good morning, traders. So I want to spend a little bit of time on positioning. So I've had quite a few questions around how do you calculate the size of your trade based on your risk profile. So I'm going to be using South African Rand as a currency, but if you're using euros, dollars, Hong Kong dollars, doesn't really matter what currency you utilize, but this formula will work for you. So I'm not really interested in day trading as such, so rather looking for an environment where we're trading because we are working and we're looking to supplement income. So we're going to focus on a small account, and in this case it's a 5,000 Rand account. I'm also going to focus on a 3% risk profile. So in other words, I'm only allowed to risk 3% of my total capital on all my trades. So in the beginning, when your account is small, this will be one trade, and the pips that you risk, or the points that you risk, are going to be different on different instruments. Okay, so let's just get down to 4-hour environment here, and let's just take this trade over here. Okay, I think we can delete that segment. So we have a level here. So we're going to take the trade that happened here. So essentially what you're looking for to do is to say, okay, if price comes back to this area, this is the area I want to be long, what am I prepared to risk? Okay, now with the South African Aussie, South African top 40, 150 pips is normally a pretty good stop loss, although the higher the volatility, obviously the more pips you need for a stop loss. So let us just say we are looking at placing a trade when we hit the bottom there. Okay, so that's the trade we're looking for. We are looking at a 150 pip stop loss, which will take us to roughly there. So stop loss of 48,450 and an entry of 48,605. So all you need to do is create yourself a spreadsheet where you have your capital, what your risk calculation is, then enter your number of pips that you risk, divide your risk capital by the number of pips, okay, and that'll give you the contract size. Okay, so the trade that you're going to place here based on this account will be 1 Rand per point. Okay, so let's just pick something different, and I think a good example here will be the FTSE. Okay, let's just delete all drawn objects. Right, so FTSE, let's just see if we can get something that's current here. Okay, so there is a level on the FTSE here, so there is the level, and we came pretty close to it. We're on the 200 moving average, so we've had support here. So let's take a breakout trade, because what we have here on the FTSE is we have a range here. Okay, so let's say we are going to go long on the FTSE when price gets above that pin bar. Okay, so that's our long entry. Obviously our stop will be at the bottom of that range bar, which will be there. So let's work out what our stop is going to be from there to there. So we're looking at a 42.6. Let's just round that off to a 45 point stop loss. So 45 point stop loss, which means I can put on 3.3 Rand for this trade. Okay, so And obviously my target here is going to be the top of this pin bar to start with. So what is my risk to reward here? If we say we are risking 45 pips, that's not going to work. We're risking 45 pips and we're looking to go there, so it's a little bit greater than a one-to-one trade. We're looking at 56 pips profit over there. What we could also do is just look for a different target. Okay, so probably not the trade you want to take. Don't take it as advice. Just looking at the last 2 daily candles, that's a lot of rejection at this bar, so there's probably a bigger move down before another move up, probably in this area down here. So just using it as an example, guys, don't take that as a trade. So just looking at the daily, here is another scenario, and if I just so I've got butter fingers today. So let's just go from that area there down to there. So you can see, so basically this pin bar here, break above it gives us the height of this pin bar, which is our target, which is basically up there. So another way of trading this would have been to say, right, I'm in for a long there on the break of that, and my stop loss is at 211 pip stop loss, and my reward is basically 211 as well. Now if you look here, 211 basically means I can only put on 0.71 rand, so 71-cent contract on this capital account. If this capital account was, let's say, 50,000 rand, okay, then it would change substantially. Then your maximum trade would be 7 rand. So, rule of thumb, make sure that you've always got a calculator or a spreadsheet or something available which helps you define what your risk is and what your pips that you're going to risk, so you can work out exactly what your contract size is. So this way you're keeping your risk at a fixed capital amount, but your contract size will vary. Okay, so a lot of times you'll have a setup where your risk of your number of pips that you're risking could be as little, especially on the FTSE, it could be as little as 11. Okay, which means you can put on a 13 rand trade. And a 13 rand trade, if it moves 100 points, is a substantial amount of money that you make out of it. So yeah, that's kind of my methodology of entering a trade. And as I said, each indicator or each index or commodity or stock or anything else that you're trading will have different setups. You know, some are more volatile than others, and others aren't. And you know, others are very, very slow. For example, FTSE is pretty slow, and then the French market's also pretty slow. Okay guys, hope that helps, and I'll catch up with you later.